Good morning, everyone. We are the Group 15 and we will report the Lesson 15 entitled Taxation. The learning outcome of this lesson are: explain the nature and purpose of taxation. Second, identify the types of national and local taxes. Third, identify the types of national and local taxes. And fourth, argue for or against a current tax issues.
What is taxation? Taxation means laying a tax through which a government generates income to defray its expenses. It is a way to raise funds for government programs and services that benefit Filipino citizens. A tax is enforced as a contribution, but it's a proportionate to the citizen's ability to pay. It is levied on persons who actually pay with money and a property as well as businesses transactions, privilege and benefits. The imposition of taxes is done by law through the Bureau of Internal Revenue. Taxation refers to the fees and financial obligation imposed by a government on its residents. Income taxes are paid in almost all countries around the world. However, taxation applies to all payments of mandatory levies, including on income, corporate, property, capital gains, sales, and inheritance. Taxation is involuntary, hence, it does not require consent from the residents. Therefore, the government may resort to the use of force and threats to implement successful taxation. Levies generated through taxation are not bound to any specific services delivery, and they are legally recognized because the compelling establishment is a government authority and not a private institution. Taxation produces a vary across governing structure and period. In modern times, taxation is also applied to physical assets and a specific contract, such as business transactions. However, modern tax policies are greatly influenced by political forces. Types of taxes: national taxes and local taxes. What are the different tax types? National taxes are the ones paid to the government through the Bureau of Internal Revenue, or BIR. Our national taxation system is based on the National Internal Revenue Code of 1997, or Republic Act number 8424, also known as the Tax Reform Act of 1997 as amended. Import and export tariff levied of Bureau of Customs are also considered national taxes and duties. On the other hand, local taxes are based on Republic Act 7160, otherwise known as Local Government Code of 1991, as amended. These taxes or fees are imposed by the local government units in every province, city, municipality, and barangay, which are given the power to levy such taxes by the code. The examples of national taxes: capital gains tax, documentary stamp tax, donors tax, estates tax, excise tax, income tax, percentage tax, value added tax or the VAT, withholding tax, and on compensation tax, while local taxes are basis real property tax, franchise tax, business of printing and publication tax, professional tax, amusement tax, community tax or commonly called cedula, annual fixed tax, barangay tax, and barangay clearance. The national taxes. Documentary stamp tax. Documentary stamp tax are evident on documents like bank promissory notes, deed of sale, and deed of assignment on transfer of shares of corporate stock ownership. Documentary stamp tax is imposed on documents, instruments, loan agreements, and papers that are used as evidence of acceptance, assignment, sale, or transfer of obligations, right, or property. Documentary stamps are usually found on deed of sale, and bank promissory notes among others.
Documentary stamp tax. Stamp taxes are evident on documents like bank promissory notes, deed of sale, and deed of assignment on transfer of shares of corporate stock ownership. It means that documentary tax are taxes imposed on people or transactions that is considered as evidence like that is happening in BIR when having a transaction on selling properties like house or land. Donor's tax. It is a tax on a donation or gift. It is also a tax imposed on the gratuitous transfer of property between two or more persons who are living at the time of transfer. It shall apply whether the transfer is in a trust or otherwise, whether the gift is direct or indirect, and whether the property is real or personal, tangible or intangible. It means donor's tax means refers to a taxes given to a properties being given or as a gift as a sign of gratitude. Usually these taxes were imposed on the rich or those who are in the highly classed of society. Estate tax. It is a tax imposed on the privilege of transmitting property upon the death of the owner. The state tax is based on the laws in force at the time of death, notwithstanding the postponement of the actual possession or enjoyment of the estate by the beneficiary. Estate tax means imposed on transactions wherein a property or hereditary transfer of any property is passed from a dead parent into his or her children's. Income tax. It is a tax on all annual profits made from ownership, profession, trades, or offices. It is also a tax on a person's income, emoluments, profits, and the like. Self-employed individuals and corporate payers pay quarterly income taxes from the first quarter to the third quarter. And instead of filing quarterly income tax on the fourth quarter, they file and pay their annual income tax return for the taxable year. Income tax means that are taxes considered as annual profit taxes imposed on individual who are employed or unemployed and pays their income tax return for the taxable year. It is based on individuals' income such as wages and salaries. Corporate income tax versus personal income tax. Corporate tax is an expense of a business cash outflow levied by the government that represents a country's main source of income. It means that corporate tax is a tax imposed by the government. This is usually given to a giant corporations and companies and has a big taxes imposed onto them. Second is personal income tax is a type of tax governmentally imposed on an individual's income, such as wages and salaries. Personal income tax means that is a type of a tax imposed to persons' income from their salaries and wages and is being deducted by BIR. percentage tax is a business tax imposed on persons, entities, or transactions specified under Section 1162127 of the National International Revenue Code of 1997. Percentage tax is a business tax, either value-added tax or VAT or percentage tax. In BIR, percentage tax means is a business tax that is regulated in the Philippines and imposed in individuals or businesses that sell goods, services with annual gross sale not exceeding 3 million and is not VAT registered. It means that the entrepreneurs or a business owner who sell supplies or services that income below 3 million is a percentage tax. Value-added tax. It is a business tax imposed and collected from the seller in the course of trade or businesses on every sale of properties, real or personal, lease of goods or properties, real or personal, or vendors of services. It is a indirect tax, thus it can be passed on the buyer, causing the increase of price of goods and services bought and paid by consumer. VAT returns are usually filed and paid monthly and quarterly. The latest law on taxation is RA 9337, signed on May 24, 2005 by President Gloria Arroyo, is known as the Expanded Value Added Tax or the EVAT law. Value-added tax means that are taxes imposed on a business or establishments or any income generating depends upon their sales and income input. Malls, stores, and more are one of the examples of value-added tax. Excise tax. It is a tax imposed on goods manufactured or produced in the Philippines for domestic sale or consumption or any other disposition. It is also imposed on things that are imported. Excise tax are means that taxes imposed on goods or products produced locally or those being imported, locally manufactured, and for domestic disposition only. Best example of this is fuel companies.
Withholding tax on compensation. This tax is what employees withheld in their employees' compensation, income, and remit to the government through the BIR or authorized accrediting agent. This means is a tax on an employee's income. In general, it allows employers to subtract and maintain a certain percentage of an employee's pay at each cut-off date, and then remit the retained sum to the Bureau of Internal Revenue. Expanded withholding tax is prescribed only for certain payer like those withheld on rental income and professional income. It is credible against the income tax due of the pay for the taxable quarter year. This means is a form of withholding tax that is imposed on some types of income taxes and is credited against the pay's income tax liability for the taxable quarter year in which the income was paid. Next, final withholding tax is a kind of withholding tax which is prescribed only for a certain payer and is not credible against the income tax due of the pay for the taxable year. Example, final word tax is the tax withheld by banks on the interest income and earned on the bank's deposit. This means is imposed on some income payments and is not deductible from the pay's income tax liability for the taxable year on other income subject to standard rates of tax. Next, withholding tax on government money payment is the withholding tax withheld by offices including government owned or state-controlled corporation and local government unit. Before making any payments to private individuals, corporation, partnership, and or association. This means before making any payments to private persons, corporations, partnerships, and or associations, government offices and instrumentalities, including government-owned or controlled corporation and local government units, and deduct withholding tax. Local taxes. Local tax is based on the local government taxation in the Philippines as stated in Republic Act 7160 or the Local Government Code 1991 as amended. These taxes, fees or charges are imposed by the local government units such as provinces, cities, municipalities, and barangays. A local tax is an assessment by a state, country, or municipality to fund public services ranging from education to garbage collection and sewer maintenance. Local taxes come in many forms, from property taxes and payroll taxes to sales taxes and licensing fees. They can vary widely from one jurisdiction to the next. Example, tax on transfer of real properties ownership is imposed on the donations, barter, or any other mode of transferring ownership or real property. Next, tax on business of printing and publication is imposed on printing and publication business like that of books, cards, posters, leaflets, handbills, certificates, receipts, pamphlets, and other of similar nature. Next, franchise tax is a tax on franchise business at that rate not exceeding 50% of one preceding 1% of the gross annual receipts of the preceding calendar year based on the income received. The annual earnings within the territorial jurisdictions where the franchise is selling in. That's the example. Number 4. Tax on sand, gravel, and other quarry resources is imposed on ordinary stone, sand, gravel, earth, and other quarry resources as defined under the National Internal Revenue Code as amended. This refers to the above materials that are extracted from public land or from the beds of seas, lakes, rivers, streams, creeks, and other public water within its territorial jurisdiction. Number 5. Professional tax is an annual tax on each person engaged in the exercise or practice of his or her profession that requires government examination like licensure examination. Number 6. Amusement tax is a tax collected from proprietors, last or operators of theaters, cinemas, concert halls, circuses, boxing studio, and other places for amusement. Depending on the state, local income taxes are levied on different types of income such as all income, earned income, or interest or dividend income. Resident and non-residents rates are frequently used as local governments recognize that non-residents receive fewer and benefits from the levied taxes. Also, annual fixed tax for every delivery truck or van of manufacturers or producers, wholesalers of dealers or retailers in certain products is an annual fixed tax for every truck, van, or any vehicle used by manufacturers, producers, wholesalers, dealers, or retailers in the delivery or distribution of distilled spirits, fermented liquors, sold drinks, cigarettes, and other products to sales outlets or consumers whether directly or indirectly within the province. This type of tax is usually imposed as determined by the local provincial council through which the truck or trucks pass through or deliver their cargo. Fees for selling and licensing of weight and measures are imposed for the selling and licensing of weight and measures. These is to impose regulations is with regards to such weights and measures as prescribed by the city, provincial, or municipal council. Tax on business is imposed by cities or municipalities on business before they will be issued a business license or permit to start operation based on the schedule of rates prescribed by the local government code as amended. Businessman or businesswoman pay their tax if they apply for a mayor's permit to conduct their business in the local government unit. Rates of these taxes vary among cities and municipalities. Also, fishery rentals fees and charges are imposed by the municipality city to grantees of fishery privileges in the municipality city water, especially the privilege to build fish, corals, oysters, mussels, or other aquatic beds or bangus fry areas and other as specified in the local government code. Community tax, also called a residence tax or pool tax, is imposed on all inhabitants of the community who is to every Filipino or alien living in the Philippines 18 years old of age or over who has been regularly employed on a wage or salary basis for at least 30 consecutive working days during any calendar year, or who is engaged in business or corporation, or who owns real property with an aggregate assessed value of 1,000 pesos or more, or who is required by law to file an income tax return. Community tax is also imposed on every corporation, no matter how created or organized, whether domestic or resident, foreign, engaged in doing business in the Philippines. Therefore, the community tax payers are classified into individuals and corporations. Tax levied by the barangays on stores or retailers with fixed business establishment with gross sales of receipt of the preceding calendar year amounting to 50,000 pesos or less to city barangays and 30,000 pesos or less for municipal barangays, at a rate not exceeding 1% on such gross sales or receipt. Service for fees or charges are fees or charges collected by the barangays for services rendered in connections with the regulation or the use of barangays owned properties or service facilities such as palays, copra, or tobacco dryers and whatsoever. Also, barangay clearance is a fee collected by barangays upon insurance of barangay clearance. Documents required for many government transactions such as when getting a business permit from a city or municipal government or applying for a job in a government office or a private company.